Hi there, welcome to Neppy Invests. If you've been an investor for any period of time, more than likely you would have come across the name The Motley Fool. This is a financial and investing advice company founded in the US state of Virginia in 1993. I think it was July 1993. This company, or The Motley Fool, can be a fairly divisive name among investors. Some people hate them. Other people absolutely adore and love this company. One of the reasons I do know about the Motley Fool is on their website they release a plethora of articles every single day. You just can't read through all of them. And a lot of these articles are about what stocks you should be buying, what stocks you should be selling. So I randomly today came across one of those articles that was written on the 1st of September 2020, and this was ASX stocks to pick, or the top ASX stocks to pick in September 2020. So I decided just to take a look at these 13 companies they decided. So what Motley Fool did is got 13 people who work for the company, and they asked all these 13 employees, what stock would you recommend right now? So we had 13 different answers. So I thought, how did those 13 companies perform in the 9 months since the 1st of September? And I just wanted to compare the performance of this hypothetical Motley Fool portfolio to the overall market and to my own portfolio. And I'll talk about the motivation and inspiration for me during this video in the next two slides. And maybe you understand why I've decided to do this video. The main motivation behind this video is in regards to a conversation I had with a colleague a few years ago. And this colleague said that I, as an individual amateur investor, cannot do a better job at picking stocks than a professional. So I should just subscribe to a stock recommending service like Motley Fool. They didn't say Motley Fool, but they did say a stock recommending service. I came away from that conversation a little bit upset because I do believe I can do a better job than these so-called professionals. So when I came across this article, I thought I'd put this conversation to the test. That conversation with the colleague might have been that motivating force behind me doing this video, but that motivation was lingering dormant in my mind for quite a while. I needed some inspiration to come forth to do this video. And that inspiration was found this morning of the time I'm doing this video at around 9 a.m. as I was doing some research on this company called 5GN. 5GN is a company I've owned in the past, and one of those companies where I sold out prematurely before the company's share price went on a significant run. So during a 4-month period from May 2020 to September of the same year, the share price rose from 90 cents to $2.40. So more than a 50 or 100% gain in the share price. So I sold out a little bit too early. But as I was doing my research, I noticed the share price of 5GN rose 23% in one day on the 31st of August 2020. Typically, when a share price rises by that amount, there needs to be, or typically there is, some sort of catalyst or reason behind that share price rise. But I could not find any reason why the share price rose by that amount in the one day. And the other thing was there was not large volume. There was sort of a normal amount of volume that day as well. So there was no reasoning behind the share price rising that amount. So I did a simple Google search. Why did 5GN share price rise 23% on 31st of August 2020? And the first thing that popped up was a Motley Fool article that was released the next day on the 1st of September. And that article was the top ASX stocks picked by Motley Fool employees for September 2020, or something similar to that. And the inspiration just hit me like a force. This was it to test my colleague's assertion that the individual amateur investor cannot pick better companies than the professionals. If you want to read this article, just Google top ASX stock picks for September 2020 from the Motley Fool. That is actually the exact title of the article. They asked the foolish writers, or the Motley Fool writers, to pick their favorite ASX stocks to buy in September. I'm assuming here they mean for the long term, because one of the mantras of the Motley Fool team is to buy a company and then hold it for as long as possible. So here are the companies that the foolish writers have come up with. And most of these companies I've already featured in videos in the past, but there are 3 companies I have not looked at all, and one company I don't know much about what they do. So here are the companies. Of course, 5GN. We also going to be talking about Adairs, Appen, Big Tin Can, Coles, JB Hi-Fi, Jumbo Interactive, Megaport, NextDC, Sydney Airport, Treasury Wine Estates, Worley, and Xero. At this point in time, 1st September 2020, I was holding 2 of these companies, Big Tin Can and Appen. I no longer am, thankfully. And I've talked about all these companies except NextDC, Worley, and Adairs. Worley's the one which I do know there's something like, or they do something like mining services or something like that. But all the other companies I do know a fair bit about. I can and do have an active imagination at times. So I came up with this scenario in regards to this novice investor. We'll call him Billy. Now, Billy's favourite aunt had just died and he inherited $130,000. That inheritance came through on the 1st of September. But Billy had no idea what to do with his inheritance. He was, going through all these ideas, maybe buying a Ferrari, a yacht, and then someone said to him, maybe you should just invest that money. But he didn't really know what to invest in. And then one of his colleagues said, well, just give your money to the professional stock pickers because they know what they're doing and you'll do really well. So Billy decided to listen to his colleague and buy $10,000 of stock in each of Motley Fool's recommendations. So how did Billy perform? Did he beat the market? And that is the question of this video. Before I start talking about the individual companies, a few assumptions I will make for Billy and his purchase of the shares. So he bought at the low of the day on 1st of September, which is quite unrealistic. More than likely you won't buy at the low of the day. And he's buying $10,000 worth of shares. And the close of trading on the 10th of June is where I'm going to compare the value of the companies right now. So unfortunately for the Motley Fool writer who recommended 5GN, they could not have picked the top any better because the share price since the 1st of September 2020 has been falling ever since. In fact, they've fallen from the $2.15 where Billy bought into to current share price at the end of closing on 10th of June of 96 cents. So the value of 5GN's shares for Billy have fallen from $10,000 to $4,465. Next company is Adairs. A better job here for whoever picked this company because the share price has risen. It's gone from $3.36 to $4.79. So Adairs' valuation has increased from $10,000 to $14,255. A good job. In fact, that's a good rise of about 43%. Onto the worst performing company in this hypothetical Motley Fool portfolio, or we'll just call it Billy's portfolio, and that is Appen. At this point in time, I actually was a holder of the company, and whoever recommended this company unfortunately chose Appen just at the wrong time because there was actually a sell signal a few days previous to this recommendation. The share price on the 1st of September was $33.31. It's fallen all the way down to $13.12. So the 300 shares that Billy bought into are now only worth $3,936. Again, the worst performing company in Billy's portfolio. Big Tin Can was another company I was a holder of on the 1st of September, and everything was looking really well. In fact, the share price rose from $1.17 when Billy bought into to a high of about $1.60 in October. So just about a month later, the share price rose quite significantly. But ever since that high of $1.60, share price has been falling. Looks like it could be trying to consolidate right now. So the share price has fallen from $1.17 to a current share price of $1.03. So Billy's shares, his 8,547 shares, are now worth $8,803. So it's not looking real good for Billy's portfolio at this point in time. The only company that has been performing well is Adairs. The next company Billy bought into was Coles. It does seem like this company was recommended on the back of the share price decreasing about 3 or 4 days previous to that. Fell from about $19 to share price of $17.31, and that's the share price Billy bought into. 578 shares. Coles has been quite volatile over the past 9 months since Billy bought in, particularly in February when they released the half-year results and the guidance was not strong. The share price fell from $18 to a low of $15 or so. However, over the past month and a half, it does look like Coles' share price has moved into a nice looking, we'll say short-term uptrend. So Billy is happy with the performance of Coles, particularly when you compare it to the performance of 5GN and Appen, even though the valuation of his Coles holdings has fallen from $10,000 to $9,647. Another company Billy has been happy with is JB Hi-Fi. He was hoping he might get some discounts by being a shareholder in this company. I'm not sure if you do. In the past, you actually used to get discounts from companies you own, but they've sort of done away with those sort of things now. Anyway, even though JB Hi-Fi's share price has been quite volatile and does look like it's trading in a range between about, we'll say, $43 and $55. The share price since he bought into it on the 1st of September and now has done virtually nothing. It's fallen from $49.25 to $48.17, and the value of his JB Hi-Fi shares has only decreased by $221, and he right now is valued at $9,779. So yes, Billy is happy with JB Hi-Fi. Billy might be happy about the performance of Coles and JB Hi-Fi, but he's ecstatic with the performance of Jumbo Interactive because the value of his holdings in this company have increased by over $1,000, currently sitting at $11,216. So he bought it at $12.93 and current share price is $14.51. When you look at the chart, there's no discernible uptrend. It's just timing at this point in time. In fact, the good thing is right now the share price is towards sort of the peak. So you can see the share price every time it gets around about $15, the share price drops. So share price right now is $14.51. And there's a possibility if it goes any higher, we might see the share price pull back again. And maybe in a month's time, Billy won't be as happy with Jumbo Interactive's performance. Megaport is another example where the Motley Fool writer who recommended it seemed to have picked the timing to perfection. They picked it at the top, $16.78, and then the share price just started going down and down and down. Went as low as about $10.50 towards the end of March. But in saying that, since that bottom of $10.50, share price has moved into a nice looking uptrend. So even though Billy is not quite happy with Megaport's performance because the value of his holdings have dropped from $10,000 to $9,440, he should be happy just by looking at the chart because the share price is rising quite well at this point in time. So if he keeps on holding to his Megaport shares in a month or 2 months, he might be quite happy with Megaport. The next company Billy bought into was NextDC, and the performance of this company from the 1st of September to the 11th or the 10th of June has been neutral. In fact, the share price has barely budged, even though you can see the share price getting to a high of $14 in November and then a low of about $10 in March. During that period, a lot of volatility, but from 1st September to the 10th of June, the share price has only fallen 10 cents. So Billy is fairly neutral in regards to this company. If he was paying attention to his performance of his portfolio every day, he would have been very happy with NextDC around November and quite dissatisfied with the performance of this company in March when the share price went to a low of $10. But overall, the holdings or the value of his holdings in NextDC has only fallen $88 since the 1st of September 2020. Billy is happy with the performance of Sydney Airport because the value of his holdings has gone up since the 1st of September. In fact, it's increased $823 as the share price has increased from $5.59 to a current share price of $6.05. But when you look at the chart, really no discernible uptrend or downtrend again. I prefer in my sentiment and momentum portfolio to buy companies that are in a nice looking uptrend. You don't see that with Sydney Airport at this point in time. The last three companies that Billy bought into, he's absolutely thrilled about. And the first company is Treasury Wines. And it does look like the Motley Fool writer who recommended this company did almost pick the bottom. It's really hard to pick the absolute bottom, but he almost, or she almost did, at $9.13. Current share price at the close of trading on the 10th of June is $11.94. So Billy's holdings or valuation of his holdings in Treasury Wine have increased from $10,000 to $13,074. He's absolutely thrilled that his holdings have increased by 31%. Likewise for Worley, this used to be Worley Parsons, right? Maybe they got rid of the Parsons and just simply Worley. Anyway, same thing for Worley. He bought at $9.22 on the 1st of September and current share price is $11.84. So the value of his holdings in this company have increased by $2,846 or nearly 30%. So he's thrilled with the performance of this company. Final company that Billy bought into is Xero. He's thrilled about this company. I'm happy about this company as well, even though I'm not a shareholder. This is a great New Zealand company, one of the best there is. Billy bought at $99.79, and the share price has increased from that to $133.11. Been fairly volatile over the past 5 or 6 months, getting to a high of $160 and a low of $104 in March. So the value of his holdings have increased by $3,311. So he's absolutely thrilled about it. Xero, Treasury Wines, Worley, and Adairs. So those have been the best 4 performance in Billy's portfolio. Here is the breakdown of Billy's portfolio on an individual stock basis. And we can see the best performing companies, I've already touched upon this, was Adairs with 42.6% gains, Treasury Wines 31%, Worley 28%, and Xero 33%. Worst performing companies, 5GN down 55% and Appen down 61%. Overall, Billy's portfolio has increased from just shy of $130,000 to $131,507, which is a 1.2% gain. Now, we don't know whether that gain, 1.2%, is good or bad because we have to compare it to the overall market. If the overall market fell 20% in the last 9 months, then Billy's portfolio has performed exceedingly well. However, if the overall market has increased 20 or 30%, then Billy's portfolio, or we'll call it the hypothetical Motley Fool September 2020 portfolio, has really underwhelmed the performance and has not done well at all. So that's what I'm going to do in the next slide, just compare the performance of this portfolio to the overall market. We looked at the capital gains of Billy's portfolio, but we also have to take into account the dividends he received in holding these 13 companies. And there are some significant dividends in there. In fact, Adairs, he received $714 during the past 9 months, and even JB Hi-Fi, $365. So the total dividends he received in holding these 13 companies amounted to just nearly $2,500, which is a little bit higher than the capital gains he received in holding these companies. So if you take into account the capital gains and the dividends, total gains he received were $4,013, which in percentage terms is 3.1%. So maybe that 3.1% is pretty good when you compare it to the overall market. So how did it compare to the overall market? Well, let's have a look. If we want to compare Billy's portfolio's performance to the overall market, we need to know a benchmark. And the best benchmark for this comparison is the XJO, or the ASX 200. And the reason why that's the best benchmark is the companies that the Motley Fool writers did recommend, most of them do fall within the realm of the top 200 companies on the ASX. So how did the XJO, or how has the XJO performed since the 1st of September 2020? Well, it has risen from 5,909 to current level of 7,266. That's a rise of 23% in 9 months. And now compare that to Billy's portfolio, which has only risen 3.1%. So this hypothetical Motley Fool portfolio has significantly underperformed the overall market. If Billy came to me before 1st September 2020, he wanted my advice on what to do with his $130,000, I would have said, put your money into an ETF and get near market returns until the time comes where you are comfortable about stock picking yourself. Don't rely on professional stock pickers to make decisions for you. And when you become comfortable in stock picking yourself, you will become a better investor in the long run. Even in my videos, I don't want anyone to just blindly buy any company I am covering simply because I'm covering that company. I don't want you to buy any company I bought into my own portfolio. You should make decisions yourself. And if you're able to justify why you're buying a company, reasonable justification, then in the long run, you will become a better investor, and more than likely, you'll be able to beat the market. That's all I've got on this video. I hope you've enjoyed it. If you do have any questions about any companies I featured in this video, about Motley Fool, about any of my opinions, make sure you leave a comment or question in the comment section, and I'll answer anything you have to say in the next few days, next few weeks. I'm not sure, depends on my time constraints. The last thing I should say is I'm not a financial advisor, so if you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's all for this video. Hope you've enjoyed it. Have a good day. Bye. See you later.